Terry Savage is a columnist for the Chicago Sun-Times, and she is back again joining us from Chicago. Terry, thank you so much. Let's get to our first viewer question here, and it's an email form. And I have to tell you, Terry, this is a question that I've been asking too. It's one of the root causes, or if one of the root causes, he says, or she says, of the collapse are all the foreclosures. Wouldn't it make sense then to reset the adjustable rate mortgages back to an affordable flat rate so people can keep their homes or even extend them? Terry, what do you say?
Well, Christy, it might make sense as a solution if, in fact, you could just go back to your bank and the bank could reach into its vault and pull out your mortgage and say, oh, yes, you're still a pretty good credit risk. We'll help you out. I've been trying to think of a way to explain what's gone on with these mortgages. Pretend you were making a giant salad for a big party and you dumped in all the lettuce and then you had some tomatoes and you chopped them up. They're getting a little soft, but oh, what the heck, you put them in there. And maybe your cucumbers are a little rotty too, but chop them up and put them in there and then give everybody a bowl of salad. Now, how do you go put the pieces back together to reassemble that mortgage? That's the problem, because all these mortgages were packaged up and sliced out and bought by investors around the world. And the idea is to try and get them all back in the salad bowl so maybe the government could organize some way to restructure the mortgages. And it's not that easy.
Okay. That was a good explanation. Thank you. I want to go to our calls now. Tim in Mount Zion, Illinois. Hi, Tim. Go ahead.
Hi. Thank you. The first day the stock market plunged, everyone's 401k lost approximately $600. Mm-hmm. Is there any way we can recover that amount back? And how do we protect ourselves in the future?
Okay, well, you're expressing the fear that everyone has. They look at their 401k statements. Now you can do it online. Now, not everybody's 401k lost money. Most people's did because they were invested in the stock market. The market went down. Some people might have been all in money market funds, and of course they didn't lose any money, but they'll never have any growth in the future. So the way you get that back is by continuing to invest every single month, whatever the couple $100 you were putting in, getting the company match for a little bit, because you believe that over the long run, and history has shown that always holds true, that over 20 years or so you're going to come out ahead. Your $200 buys more shares of that mutual fund at lower prices, so when the market does rebound, you get a bigger bang for your bucks.
All right, good to know. Betty, who is in Birmingham, Alabama. Betty, you're on stage. Go ahead.
Yes, Ms. Savage. I have funds in an easy access money market account, and they're in a credit union. And I was wondering if these funds are secured by the government, similar to the FDIC funds.
That is a good question. I've been getting that question a lot. The FDIC insures bank deposits. Something called NCUA insures, just like FDIC insures credit union deposits, almost all credit union deposits, and they have the same rules as the FDIC and the same line to the Treasury. So NCUA insured credit union deposits or share accounts are equally safe. I want to point something out, and I don't want to start a run. Some credit unions have chosen to be privately insured. And those private insurers don't have, in theory, the same access to the backup that the Treasury offers. So you want to make sure you have that NCUA logo on your credit union shares.
Okay, good to know to watch for that. And Pam from Fort Myers, Florida, you're our last caller. Go ahead, Pam.
Thank you. Good afternoon. I have two daughters who apply each year for federal student loans using the FAFSA application to attend college. One attends in New York and one in Florida. Due to the current credit crisis and in light of John McCain's worrisome proposal for a federal spending freeze, will my daughters and the thousands of others who rely on federal funds for college still be able to secure those loans so they'll be able to finish college without interruption? And will they have other options? Thank you.
You know, a lot of students are worrying about this. These are not actually, well, now they may actually be federal student loans, but you fill out that form and then your college or university that accepts you says you qualify for these federally subsidized student loans, which are made mostly, in the past anyway, through private banks. Now, the banks have been worried about getting the collections on those loans, so student loan credit is drying up along with all other kinds of credit. It's wise to check with your lender, make sure that you're going to get your next semester's loan, and we will have to see how this financial rescue plan works out to see if the financial community feels secure enough to start re-extending these loans and to new students who will apply in the fall. As the economy goes into a recession or a slowdown, you're going to have less income perhaps and maybe a better chance at qualifying for more student aid. That's a very slim, bright lining to this.
Okay, but we'll take any bright lining we can get, I think, at this point. Terry Savage out of Chicago. I know we'll be talking to you in the next half hour as well. Thank you so much.
Yes.